Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Yahoo Finance Executive Editor Brian Sozzi. Let's fire up three things you need to know today. First up, Meta goes holiday shopping. Mark Zuckerberg's social media beast will acquire AI startup Manus for $2 billion. The company is a Singapore-based outfit with Chinese founders that conducts deep AI research. It will see Meta enter the AI agent game, putting it potentially on a collision course with Microsoft's Copilot and Salesforce's Agentforce. While the purchase price seems large in a holiday-shortened trading week when there's not a lot of news, let's keep things in perspective. Meta ended the third quarter with about $45 billion in cash. We are nearing the final days of the Santa Claus rally period for markets. The market has traded sideways going back to the first measurement day on December 26, which is suggesting a counter trend happening. Since 1969, the S&P 500 has averaged gains of 1.3% during the 7-day period, with positive returns occurring roughly 78% of the time. I caution, though, markets have more than enough time to finish on a positive note for the year. Plus, we are a day out from Warren Buffett officially stepping down as CEO of Berkshire Hathaway. I can't believe this day is here. Had to happen, though. Buffett will be handing the leadership baton to handpicked successor Greg Abel. I'll be checking in with our morning brief guests on what they have learned about investing from Buffett and if they like any of the stocks he has in his vast portfolio. All right, let's get checking the markets here ahead of the open. Markets slightly in the red. You're seeing really thin trading activity. This is a holiday shortened week, so don't get too worried about what you're seeing there on that screen, but red nonetheless. All right, let's dish out some context on our top investing stories of the morning. Yahoo Finance senior reporters Ines, Ferré, and Brooke DiPalma are in the house. Also with us is Josh Wein, Hennessy Funds portfolio manager. Josh, good to see you here. I talked a little bit about it yesterday, kind of continuing the theme of what NVIDIA did with Grok, that big $20 billion deal. Today we have this deal, Meta spending $2 billion to buy Manus. What does that signal to you about the AI trade?
Yeah, it's good to be with you, Brian. Yeah, it seems like, there's certainly an overall theme in the market of a lot of cash on balance sheets. The S&P company is about $7 trillion in cash. I think with AI, it's like an arms race. These small companies are obviously being bought up and they don't mean anything to the average investor, but it's kind of, I think time is of the essence. And instead of developing these technologies on their own, a lot of companies are just going to the M&A market, and it signals an urgency that we haven't seen in a while on the part of a sector of the economy.
Brooke, poll 5,000 people yesterday, and I would argue they never even heard of Manus before.
No.
Go ahead,
They
Brooke.
definitely have not heard of Manus, Manus, or rather, but basically what we're hearing from Wall Street this morning is that this is really Meta's way of getting in on the action, as Josh alluded to. Bloomberg intelligence analysts saying largely that this purchase expands Meta's former AI agent task capabilities, as it currently lacks applications built on foundations. Think about it. You have ChatGPT, you have Google Gemini, you have Anthropic Cloud, and so really what was needed here was something like this for Meta to really get in the game. They said they're going to spend billions of dollars on data projects in the coming years. And so really investors are waiting on that key return of this investment and how this plays out. And that certainly gives Meta the reality of this. Also, this company really kind of getting in on the action here, this startup really getting in on Meta's on a good note, getting in where it's early on. Meta can really mold this over the next couple of years to make it what it is.
And as I love seeing these deals, NVIDIA for Grok, $20 billion, Meta dropping $2 billion in this company, I would argue not a lot of folks had even heard of. It really pushes back on that AI bubble thesis.
100%. And if you take a look at what this company is, they launched in March of 2025. So it really speaks to the speed of where AI is going. This is not just a chatbot. It is much more sophisticated from what I've seen compared to Google Gemini, compared to ChatGPT, because it actually can do things for you. If you look at one of their videos online about what this can do for recruiters, it can look through resumes. It'll give you a synopsis and get recommendations. When your laptop is even off, you can. It's still running for you. The program's still running. It can do property research. It can build websites. It can make videos. It does so much more. So the fact that Meta has acquired this company at such an early stage really signals where this agent AI is going, and the big capabilities that you're seeing within AI.
Josh, I loved what you wrote here on the notes that you sent over to us, and I think it reflects what we've seen with this deal. For example, a very high valuation being paid by Meta. You said this: the market might be expensive, but stocks are not. Explain that to us.
Sure. Yeah. Obviously the market, with the S&P as a proxy for it, is market cap weighted. It's been all about technology, and so 22 times forward earnings for the market, implies more good things happening, growth and margin expansion. But the average S&P stock is at about 17 times. And that would be probably, the non-tech names, industrials and retail and things like that. But I think that 22 times isn't crazy given where we are with interest rates and, and fundamentals. But I think it's a lot more comfortable to be more on the average stock side, which is really how people invest. I mean, most individuals and fund managers do not market cap weight their portfolios. They're equally weighting or some variation of that. So I think that, the market feels right to me, and certainly tech probably has room to run as well, but certainly there's more volatility there if there's a weak quarter or something coming out of China like we saw earlier in the year, which shook the market.
Josh, you seem keen on mid-cap stocks. Now, when you're picking a mid-cap stock in this environment, must that stock have some form of AI play tied to it?
No, but I think ultimately, whether it's on the revenue side or the expense side, every mid-cap stock is, if they don't already, will be a beneficiary of AI. So we're picking stocks. It's a rules-based methodology. So in our Cornerstone Midcap 30 fund, we're looking at valuation, stock price momentum, and earnings growth. And so that does lead us, right now to a lot of industrial names and consumer discretionary names. And it's very easy to see, for them, a use case for AI. But no, we are not really, it is not a bottoms up, in the weeds fund where we're looking for, explicit exposures to AI or anything like that.
And as speaking of industrials like Josh was talking about, I can't wait till these mining companies report earnings late January, early February. On paper, they have to be sitting on some major quarters.
100%. The mining companies are where it's at. If you look at what Wall Street is saying about these mining companies and the fact that you've seen the metals rally so much. By the way, I spoke to the CEO of a minting company and a high security vault company that they keep gold and silver for governments, for banks, et cetera. And he's expecting that you will see that the days basically of cheap silver are over. We saw this big run up with silver, we've seen the run up with copper this year and with gold. And he's saying we're basically in a metals war. You are looking at companies that or governments that are, China now has a restriction on silver starting in January. You've got the US that has silver now on its critical minerals list. And by the way, you even have Samsung, for example, which has put $7 million into a junior miner for a mining site in Mexico. So they have the right of first refusal for silver that comes out of that mine. Why? Because they need it for their batteries, for their EV batteries. So yes, mining is where it's at right now. The miners are where it's at.
Ines, that sounds like a fun conversation.
It was an incredibly fun conversation. I also spoke to the Silver Institute about the applications for silver as well. Look, it's amazing what's happening. And yes, all of this onshoring, all of this data center, all of this AI boom, so much of this is driving up the need for metals, besides the fact that you've got a weaker dollar and all these sort of geopolitical events that are happening. But one other note, what the U.S. is also, as far as the policies in South America, that's also for resources. That's to gain resources that are in South America and to keep them away from China. So really, really interesting phenomenons or events that are happening across the metal space right now.
Love to see you mine for stories there, Ines. Brooke, where'd my Santa Claus rally go?
What we've definitely seen is a bit of a rotation out, a bit of profit taking by investors. We had some optimism heading into the Christmas Eve holiday, and then a little bit on Friday was lost, and that definitely continued momentum on Monday's trading session as well. And we saw some of the big players like Nvidia, Palantir, Tesla move lower during Monday's trading session. And so it seems to be this rotation because of that AI bubble risk concerns that we just keep hearing about. It seems like investors just can't shake it off. And so what we're seeing in these last few trading sessions is definitely a bit of profit taking by investors, maybe pulling out a bit of just a tad from those AI names that have gotten so much attention this year, Palantir, Nvidia, just to name a few. And now we're seeing just a small rotation. But like you said at the top of the show, really not much movement in these final trading sessions of the year. All three major indices mostly flat to start off today's trading session.
Josh, all this week we're putting a huge spotlight on the career of investing OG Warren Buffett. Of course, tomorrow is his final day as CEO. He will step aside for Greg Abel, handpicked successor. How has Buffett's philosophy impacted what you do?
It's a great question. Yeah, I think that ultimately investing doesn't have to be exciting. If you look back over his career, I think of Coke and some investments in banks and, Gillette back in the day. Those were never exciting. There were exciting companies that he could have been involved with in technology and healthcare and all of that. And maybe that would have, been to his benefit. But ultimately, the track record speaks for itself. So I think all the time that, in our funds, we tend not to own the sexy companies, the things that make for good cocktail party chatter. And we, in our Cornerstone Midcap 30 fund, the record speaks for itself. And we have not owned any of the Magnificent Seven, and that's been fine. So I think that, it does not have to be exciting. People are always, they want to make this exciting, and it really doesn't need to be.
Great perspective there. Josh, Brooke, and Ines, thanks so much. Appreciate it.
Thanks, Brian.
Straight ahead on Morning Brief, I'll have a few Yahoo Finance trending tickers you need to watch out for today. And Nancy Tengler stops by to reveal her top picks for 2026. Welcome back to Morning Brief, presented by Robinhood. Let's get a look at some of today's Yahoo Finance trending tickers. We're watching Tesla, Metals, and Boeing. First up, Tesla. The EV maker publishing data it compiled of fourth quarter delivery expectations from analysts, and the outlook is minus a charge. According to Tesla's count, the expectation is deliveries will be down 15% in the final 3 months of the year compared to a year ago. And that estimate is even worse than Wall Street consensus. But the news doesn't appear to be bad enough to shake investor optimism. The stock is higher ahead of the open. Next, the metals trade. Gold, silver, and copper on a roller coaster ride as we close out 2025. Prices are jumping after Monday's sharp sell-off. The move in silver was the worst one-day decline in over 5 years. And the metals are taking the mining stocks along for the ride. We're seeing miners also bouncing back after sliding on Monday. Checking on the gold miners, Barrick, Newmont Mining, both higher. Hecla Mining, which is the largest silver miner, is jumping ahead of the open. And one of the world's top copper producers, Freeport-McMoRan, is also up. So much luster on these names. Finally, Boeing. The stock is taking flight after securing an $8.6 billion Air Force contract. The jet maker will build F-15 fighter jets for the Israeli army. The Pentagon announcing the contract late Monday after President Trump met with Israeli Prime Minister Benjamin Netanyahu at his posh Mar-a-Lago resort. All right, the next move in tech stocks is truly anyone's guess. On the one hand, companies like Nvidia and Microsoft are likely to put up more huge earnings numbers in 2026 at the hands of the AI boom. At the same time, one can make the case tech stocks are grossly overvalued because AI tech is still wildly unproven. I suspect my next guest has some thoughts on all this. Laffer Tengler, Investment CEO and CIO Nancy Tengler is here. Nancy, good to see you. I have just realized I've spent too much time the past 2 weeks talking about Google and Amazon. I want to go to one of your picks for next year. That is Palantir. Make your case.
Oh, well, we love the name from a defense standpoint. They are the leader in AI and data with Defense Department approval and usage. And then beyond that, corporate adoption and sovereign adoption. So we think the name continues. It's one of those names, Brian, you can't justify it from a valuation standpoint, just like one of our names in our 6 for 26, Tesla, which you were just talking about. Hard to defend the valuation, but the narrative is quite compelling, and that can drive stocks for a very long time, like it did Amazon for the first 20 years of Amazon's IPO life.
So Nancy, is it more, how do you, so when you're looking at a company like Palantir, do you just suspend everything that you've learned on valuation? I mean, I've done the same too when looking at Palantir. I mean, this stock is traded at crazy multiples.
Yeah, I mean, I'm a classically trained value investor. And one of the things that you had to learn as a value investor is when to pivot. And I don't mean it's different this time or change your discipline. You just have to look at things a little bit differently when the earnings are not what they might be based on valuation or at all. In the case of Amazon, I missed the first, 20 years of IPO life for Amazon. And the stock's up 175,000%, 180,000% since the IPO. When was it too late to get in? I mean, we eventually did. We began to understand the world was different in many ways in terms of this is a transformative company. And that's what Palantir is. It's what a number of the names in our 6 for 26 are.
What is the better buy, Nancy, Palantir or Tesla? Or should you have both of these names in your portfolio because they're both strong AI plays?
I mean, if I had to tip the scale, I would say Tesla is probably our favorite, and that's why it's in our 6 for 26. It is the transformative AI leader. It's not just full self-driving, but it's also robotics. And even if you look beyond that in the XAI investment the company is making per shareholder approval, we think all of that is super powerful, and we'd love to get a bite at the space business when they IPO. So I think this is a company that has a vision, and it's the CEO, obviously, unlike any other company that we own.
How much of a factor on Tesla is Elon's $1 trillion pay package? I mean, how do you grade that? Because that could be, even for the world's richest person, that could be something highly motivating.
Well, I think he's internally motivated. If you read Walter Isaacson's biography, he said, Elon said, I'm programmed for war. And that is when he is at his best. He often teeters on the edge of disaster, pulls back just in time, and then delivers on what many thought were ridiculous promises. And sometimes they've not happened in a timely fashion, for sure. But if you look at what he is envisioning, it's not just EVs, obviously. I mean, the car numbers are disappointing, but think of Tesla's EV business to the AI portion of the business, what Apple's handset business was to services in the ecosystem. And so Apple, had many years of underperformance in terms of delivering growth in the handset business, but they were growing the services business at a rapid pace and continue to do so. So we think he is the story. He delivered on the last sort of absurd levels of incentives for the company and is now actually going to get paid for that. It isn't the money for him. I think it's the control.
Nancy, I think people forgot about Amazon. Underperformed this year. I wrote a story yesterday on Yahoo Finance laying out why the stock could rise 50% next year. I got a lot of, let's say, negative feedback on that. Very important. I wasn't making this call. I was just laying out the reasons why it could happen. Am I out of my mind here?
Welcome to the investment business. No, I saw it, and I do agree. I think there are a number, it's been a laggard. They delivered robust earnings. I mean, really a massive earnings beat last quarter. The AWS business is very mature, but still growing at 20%. And they offered this tidbit that I didn't see many people talk about, and that is that October growth in that business was bigger than the whole third quarter. So I wouldn't underestimate them. Trainium is at full capacity and has a backlog. And it's a stock that's trading at a peg of 1.4 times. If you go back and look at the S&P historically, it's traded at a peg of 1.5 to 2 times. So I think this company is fairly valued and has the ability to deliver not just robust earnings growth, but free cash flow is going to increase next year to levels we haven't seen in 5 years.
And Nancy, you're in good company because Warren Buffett has also liked Amazon. That brings me on to my next topic. Tomorrow is his last day as CEO. It almost is surreal to see this day finally here, but nothing lasts forever. What have you learned from Warren Buffett's investing career, and what principles have you applied to how you do business?
Perspective, I think, Brian. I mean, I actually, little known fact, I managed a $100 million portfolio for Cologne Reinsurance, which was acquired by Buffett, Berkshire. And so for a year, they kept us on and we managed money for Warren Buffett. I think it was out of the kindness of his heart because we were new. I mean, we generated great returns for the firm, but he has a perspective and I would say that kindness matters in this business. There's a lot of people that are not humble. They don't learn from their mistakes, and they're not the kind of people you want to hang out with, as you saw as a result of your article. He has never engaged in that, and he has been steady at the helm. He has perspective, and when he pivoted to Apple, though we were already in the stock, I thought that was an important moment to pay attention to.
Is that one of the best ways to become a better investor, Nancy, to learn from your mistakes? Not every investment is going to work out.
100%. I have a team of analysts. That's all I talk about with them. And some can't do it. And we had one that recently left, and that was the reason. You have to have the humility to learn from your mistakes and also admit them. If you can't admit them, then you don't learn from them. So I make a mistake every day. We have I don't know what you call it, but a watchword or a watch sentence in our firm, which is investing is about being mostly right. And if you're mostly right, you'll generate top 1% returns. And we've been able to do that over the long term. But we're not right every day. And it's a humbling business.
Indeed it is. Nancy, always good to see you. Happy holidays. Happy New Year. I look forward to talking to you again soon.
You too, Brian. Thank you.
All right, that does it for Morning Brief presented by Robinhood. I'll be right back on Opening Bid, coming in hot on what Warren Buffett's favorite indicator reveals about the stock market. That's next.